Good morning, ladies and gentlemen. How's everybody doing today? Hopefully good. Hopefully real good, real good, real good. All right, so we're just going to hop right into it, right into screen share here so we can get going for the most part. Work down there. So, anyways, Matthew Ferguson, the boy, I appreciate it. Thank you very much. Thank you very much. Now, today, I forgot to put on the title here. I was thinking about putting on AMRS, so we'll talk about AMRS here a little bit. I did forget to put it on, but it is a penny stock that was shooting up this morning. So specifically, whenever we see a penny stock like AMRS just shoot straight through the roof, they're usually not that great of a stock, just because they make this massive move straight up and then they usually come crashing right back down. So right now, there's really nothing about AMRS that's really bullish from this last move. The only thing I could say to watch with AMRS would be this. With the way it's pulling back, ideally there's two things. Right here, there's a level at 449 you could watch for support. If it breaks that, there's another one here at 431 you could watch for support, but that's probably the only area as a bullish trader that I could, suggest or wrap my head around entering. Oh, it's all so blurry. I gotta get this thing fixed. It's just so annoying. Whenever I try and do this, it just never works. Back here, no. Over here, no. This way, that way. Finally, I gotta get that auto thing off ASAP. Higher Self, thank you very much as well. If there's a stock for either of you guys, Matthew or Higher Self, if there's a stock you want me to take a look at, just send it in the chat and I'll take a look at it for you. All right, so AMRS, the only thing I could wrap my head around for buying would have to be right around the, the 449 or the 432 level, because there's really nothing about the stock on this chart that shows any support other than these two little gap areas where the candle gapped up. And then also, let me point this out here. You see how the chart has a gap right here from, back earlier in the year. The price had moved up to about 550, so it almost did a gap fill. That's what we would call a gap fill. Ideally, with the way the price shot up, you can see it almost filled that gap. So I don't think we're going to get a whole lot more movement on AMRS today. We might. I'd have to do some more research on it. I didn't look into the filings of this company. But I'm going to go with off the top of my head from the experience I've had that this is probably going to turn into a dud for the day. I don't think we're going to see this be anything too crazy. I could be wrong. I'd say still watch it, but don't get your hopes up just yet, okay? Because there's nothing about this chart that says bullish. It's just one move up and a fade out, right? It's not bouncing yet. There's nothing bouncing. So there's been no bullishness since this move, right? So I would be hesitant on AMRS or on AMRS today. I would just be on the sidelines with that. ACB, yes sir. I will take a look at ACB right now. So hold on, guys. We got to take a look at ACB. Matthew Ferguson. We're going to take a look at ACB for him. All right, so ACB is probably going to tie in closely. So you can see CRON's on the watch list and NBEV. CRON and NBEV aren't necessarily on the watch list now for you got to buy them up. We're going to talk more about those here, and this will kind of tie into ACB for you, Matthew. So with ACB, let me put up. Let me do this. I'm going to put two charts next to each other here. Okay. Oh shit, that didn't work. Let's go back like that. There we go. So I'm gonna put two charts next to each other, all right? And what we're gonna do is we're gonna look at yearly charts and we're gonna run through pretty much all the main marijuana stocks, right? So this is ACB. You can see it's had a good move up, right? So that's ACB on the yearly chart. Then we'll look at, we'll just look at CGC, right? We'll go to a yearly chart on CGC over here. All right, look at the yearly chart on CGC. All right, now we're going to put up a chart of NBEV. We're going to put up the chart of NBEV. All right, now we're going to put up a chart of CRON. CRON might be a little bit different, right? There's a chart of CRON, and then here is the last one, APHA. All right, so I ran through those pretty quick. Okay, now let's go through them again. Look at ACB. Now look at the one on the right, APH8. Now look at the one on the right, CGC. And look at the one on the right, NBEV, or NBEV. And then lastly, CRON. CRON is one that's kind of stands out because it went through a massive move, okay? CRON is what we would call kind of the parabolic one, while on the flip side, ACB, CGC, and APHA are all on regular moves. These are actual legitimate regular moves that we would see a stock do. They go through like a dip and they have a nice bounce. Whereas CRON is kind of something that doesn't happen very often. CRON is one where we had a massive breakout and a big, massive short squeeze. So what's going on right now is all the marijuana stocks are picking up in hype right now, and they're picking up in momentum. All right. Right now, CRON, you could probably say, is the leading marijuana stock that most people are following because the run has been so big and it's been going up so high. So the second that CRON starts to see weakness, you're most likely going to see weakness in all the other marijuana stocks. Right now, if you're asking about Aurora Cannabis, ACB, if you look at CRON this morning, you can see CRON, well, yesterday CRON as well, but what's potentially forming, oh no. Oh no, did the internet shut off? That's weird. That was weird. I don't know, my internet just kind of glitched out there for a second. Okay, so what we're seeing is a potential double top starting with CRON. These are very weak signs. This is bearish signs right now. And just to note for everybody, I started shorting CRON yesterday here at about 23.58. And I'm holding overnight. So now I am short on the stock CRON. So what I'm getting at is CRON is the leading one right now that most people are focusing on. So when everybody is seeing that CRON is going crazy, then a lot of hype picks up into the marijuana stocks across the board. That's why we've been seeing ACB, CGC, APHA, and then arguably NBEV have some good moves. Now they're all unique in their own company in a sense, but when all of those same stocks are doing really well, then people just kind of say, oh, the weed stocks are doing well, so there's this added catalyst to it. So with ACB, my recommendation right now is to start looking at ACB as a sell if you're long, and start watching it as a short if you're long and are going to get out, or start watching it as a short if you like to short. But we're starting to see weakness in CRON. We're starting to see weakness in CGC. We're starting to see weakness across the board in all of the marijuana stocks, right? So if you're looking at 5 marijuana stocks, they're all starting to show weakness. There's a strong chance that they're all going to. Again, if they're all showing weakness, that's probably not a coincidence, right? Okay, it's something's going on there, and they're probably just getting to a point where they're a little bit overbought and they're time to come down. So with ACB, I would highly suggest to kind of consider it as a sell, and then, you know, arguably the best looking area for another buy point would probably be around 726. So that's like the soonest one I would kind of consider as a buy, but I would be looking at ACB as a sell. All right. I got to go to higher self. Where's your, there you go. Tesla and Amazon. All right. Guys, you know, I apologize, but these, some of these followers here, Enrique and higher self, you know, they donated some money, so we got to take a look at their stocks. I hope any of you guys aren't getting offended, but you know, they did use the super chat feature, which usually never happens, but I'm super happy it did. So it's cool, it's exciting. So I got to run through Amazon, and I got to run through Tesla for higher self 33. So let's take a look at Amazon and Tesla. So we'll start here with Amazon. Let me go full screen on Amazon first. All right, let me get some old drawings off of here. What time is it? 9:44. All right. So Amazon just had their earnings, of course. Now Amazon put in record, I'm pretty sure they put in record numbers, like holiday sales numbers. So the earnings was actually pretty good. I think it might have been guidance that was lowered. I'd have to double check. But in terms of Amazon, I'm actually bullish on Amazon. I just don't see the bearishness right now, okay? With the way the market's performing, all right, we've had the market continuing up for God knows how many days, but so many days now. All the dips are getting bought, right? So it's hard for me to be short bias or a seller on Amazon just yet. In the long term, yes, right? But in the short term of like a month, maybe a couple months, I don't really see Amazon getting annihilated. It just doesn't seem like that's going to happen, right? And the reason I say that is because of the chart, for one, right? We had the drastic sell-off, and I wish I had those drawing tools. I don't, but right, we had this sell-off, right? So we have this big sell-off, and you'll notice these dips are getting bought up very aggressively. So I would say in the short term, watch for Amazon to actually kind of roll to the downside here. Okay, because you can see all these moving averages are coming together and it's creating consolidation. Amazon is obviously up at resistance towards its previous pops. So we should, and it would make sense to see some selling pressure come in as we have these tops, right? We have this sell-off, top, top, top. Look for a little bit of a sell-off here, and then watch as it comes down. See if it starts to get bought up around these low points. If it rolls over and starts getting bought up around these low points over here, not the very low, but the previous ones before that one, then you'll be looking at an inverse head and shoulders pattern, which is a bullish move for Amazon, which would most likely break back up over these highs of like 1775, 1800 level. All right, so that's kind of where my mind at. I would probably be neutral on Amazon until it at least sells off a little bit more, or until it shows an aggressively bullish signal. So right now it's not. It's just neutral. It's consolidating in all this price action. So I would wait for the move down or wait for a consolidation leading to a wedge and a curl up on Amazon, which I think would probably take at least a week to towards even maybe the rest of the month on Amazon. Now Tesla. Tesla's one, so if I just gotta say this, Tesla is something that I never would recommend holding. I would recommend basically getting in and getting out and just not being greedy with. And the reason I say that is just look at the chart of Tesla, okay? You know, it's just so aggressively volatile back and forth that it's not something you really want to put too much trust into, unless you're really, you know, super advocate of Tesla and you think it's just the best long for the future. You think they're going to grow. You think it's going to be a massive company, and the thing's going out of focus again. I really got to get this thing fixed for the next time we do this. It's driving me crazy. Cannot get it in focus ever. It goes out of focus so easy. Nope, almost. Maybe it'll pick up a second. But either way, you're just going to have to go with the blur for now. But Tesla's one where, you know, if you're really long-term on it, then yeah, you could live through the volatile moments. But let me try something. It's driving me crazy. There it goes. All right. So Tesla's one where if it... you know, if you're holding long-term, you could really go through all the volatile moments. But with this very aggressive back and forth movement, it's really not something that I would want to be holding for too long. All right, so first, that's really on Tesla. Secondly, this is what I'd be paying attention to right here, is Tesla has this short-term downward trend line like this, okay? And I would mark off all your resistance points. Tesla is a very technical stock. That's why it's, you know, it goes back and forth, but it's always bouncing off of levels. So you really have to be understanding of your technical analysis. Ready? Look at this level I just drew in the middle here. You can see that's where Tesla's fighting to get through. So right now, this 317 area is kind of a significant level in a sense that it needs to either hit here and start rolling to the downside, or it'll break up over this and kind of start this funky, choppy consolidation right in the top zone. So for me right now, I would watch for another sell-off on Tesla that hopefully brings it down for a retest. Right here is not a good time to buy. It's actually probably a better time to either be neutral or looking at a sell. and then wait for it to dip, provide a higher low from this low, right? So you have this low, wait for it to hopefully roll over, create a higher low, trend back up, and that's probably where I would look to maybe consider getting in long for Tesla. But as you know, Tesla was dropping employees, so they kind of had some negative news, right? So this is something that you got to be very careful with. I'm not a crazy Tesla person for long or for holding, but you know, for day trading, it'll work. Me personally, I would say be neutral on Tesla and just be patient with it, because if you can grab it closer to these previous 52-week lows, it's a way better long. You've seen every time it gets down into this area, it usually goes back up at some point. So you're much safer just waiting on Tesla till it gets down to one of these low points or even back towards its 52-week highs, and you could look to short, okay? And then AEZS, I will take a look at AEZS real fast, guys, for Mr. Enrique here. I feel like I just looked at this. Maybe that's definitely not the case, but it feels like I kind of did, but I didn't. All right, so AEZS, this is actually a very bullish chart, all right? Now, there is something I have to point out. This chart looks really good, okay? Really, really good, actually. But look at the volume on the stock. Arguably, it doesn't really have all that much volume. So if you look at the stock chart, right, Connor looks and he comes to the stock chart. Enrique asks Connor to look at AEZS. I'm like, all right, the boy, let's look at AEZS. I come to AEZS, I put it on a yearly time frame and go, wow, this is a really good looking chart, right? It's got a nice move up. It's had some pullbacks. They've consistently got bought up. Stock is breaking over its 52-week high. Really nice. But then I look down at the volume and I go, well, the volume is arguably really, really low. So if it's arguably really, really low, I know the likelihood of seeing super fast, aggressive moves is probably not likely. So if I want to trade this stock, I should not be watching this stock or going to trade this stock today or tomorrow anticipating that it's just going to jump $2, jump $4. It's not going to happen. That's just most likely not what's going to happen. So I got to set myself up for reality, in which is this stock on average will probably move 30, 40, maybe 50 cents a share on any given day, but probably anywhere from 15 to 30 cents a share. That's what I should expect. So I should be planning my trade around the average true range. In this case, it's probably about 30 cents. So I shouldn't be looking at this as something that I'm probably going to be day trading. So now let's look at a 1-minute chart. So we've looked at the yearly chart here. Now let's go into the 1-minute chart. And what are we seeing? We go to the 1-minute chart and look at the volume, right? Look at the stock, right? Does this look like, and like literally, right? Ask yourself this, guys. Does this look like a stock that will be easy to day trade? Probably not. Because you're seeing, you can just see gaps in the candles. There is no volume, right? Imagine trying to hop in a couple thousand shares. You would move the price yourself. So now you know, after looking at the stock, it's bullish, it looks good, but you've looked at the volume. The volume's not that high. So now the volume should dictate how you should be trading it, which you've come to find you probably shouldn't day trade it in a sense where you're trying to slam in a bunch of shares and get out really quickly. Like, you could buy some shares and hold it all day, and that's still called a day trade, but you're not doing your fast intraday scalp fast trading. This is something where you buy it, hold longer, right? You're not going to be holding for 10 seconds, 30 seconds. You're going to be holding for 10, 20, 30 minutes, maybe all day. So this is something where I would anticipate it being a slow mover. You're not going to make a ton of money super fast, and you're going to want to size accordingly, and you're going to be looking at this more of a swing trade. And in my opinion, I think that I think you're onto a good stock. For one, because everything about it's just bullish. The only thing that and this is what I do really like, this big volume spike, that's something to pay attention to. There's no volume, no volume, no volume, no volume, no volume, no volume. Boom, spike of 15 million, 17, 18, 20 million out of nowhere. Okay? Penny stock, it shoots up, never comes crashing back down. Never came back down. Most penny stocks, when they shoot up, they come crashing back down. But this one shoots up on high volume, and then it stays up and stays going. sometimes that's a sign that you're onto a stock that might actually have really good long-term growth. And that's actually a tip I'll give for you guys, is really pay attention. This is a really good tip. And it's not like a strategy, and you know, it doesn't work 100%. There's still so much more to it, but for one, in stocks, the most important thing is volume, right? Like people wanting to trade it, people wanting to own it, okay? When you come across a stock similar to this, where, right, if you look at the stock, look at the past year, nobody's trading it. I mean, it's obviously getting traded, but the volume's so low. No one's trading it. No one's doing anything with it. Nothing. And then all of a sudden, boom, 15 million, 17 million shares out of nowhere. And then the stock doesn't sell off, right? Again, think about that. It's like nobody cares. It's the best thing ever, right? It was like a fidget spinner. Like fidget spinner, what the hell was a fidget spinner? And then boom, out of nowhere, right? But fidget spinners died off, right? Fidget spinners basically died off, but has not, right? So whenever you see no volume and all of a sudden a big spike in volume, that means that for some reason, a lot of people started wanting that stock. Now it's your job to figure out why everyone started wanting that stock. Is it legitimate or is it not legitimate? Like, is it a good reason or is there some bullshit, right? And that's what you're looking at. But I would say, Enrique, you're probably onto something good here. Wow. All right, so we went over all of that. Is there anything, I got to cover this last one real fast. This is ABMD. Now, I don't know how many of you guys are going to trade this, but this is something that might be interesting. Now, this is like a $300, $400 stock, so it's definitely pretty expensive. Now, this was actually, I'm not going to take credit for this if it turns into a massive play. This will actually be credited to, actually, one of our private members told me to watch this stock. I think he's a medical student. Yeah, he's a medical student, goes by the name of Dr. 007 in our room, and he told me to follow this stock. Now, you know, arguably, you know, it may not be good, but it is kind of interesting. The news here yesterday on the stock, and again, I don't fully understand the news, so I got to do more research probably on it, but it is interesting. It says some news here. Letter to healthcare providers says FDA increase rate of mortality in patients that receive ABMD Impella RP system. Now, I don't even know what that is. But when I'm looking at the headline and I'm seeing the FDA increases rate of mortality, mortality means death in patients, so patients are dying, or there's a rate of increased death, right? That is like, well, that doesn't sound good, right? If you have patients and there's an increased mortality rate from a device that doesn't sound good. And you can see yesterday, obviously, it didn't do good. It went from 352 all the way to 316. It dropped like 40 points, 30 points a share in just a couple minutes, 20, 30 minutes. So that tells me this stock can have some really big range, so some big opportunity. Now the question is this legitimate news? Is it the type of news that's going to drag this stock down today? I don't know, but we'll see. And maybe it's something that you guys might want to follow. So again, right, and that's the thing, guys, is I don't quite understand that news. So I wanted to point it out. And that's the thing, is I don't know a whole lot about it. And so maybe you guys can tell me more. Is that something that is bad or is that good? Because I can't fully wrap my head around that. Okay, here's another one. Yeah. Slumps after FDA warns prior cardiac problems may increase risk for Impella RP implant patients. So yeah, it's really not some good news. Okay. So yeah. WFT. Yeah, so and then here's another thing before we go. So here's another thing, right? It looks like the company's 8K filing shows that the company has proactively sent physicians who use the product a post-approval study, and the data should provide additional evidence of benefits of the following proper protocols for replacement of the impeller. So so the 8K is showing that they're sort of taking some necessary steps to maybe help the problem. So it doesn't sound good. Doesn't sound good. All right. So yes, we will take a look at, let's see, WFT here, guys. I am short CRON with options right now. WFT. Oh, you fucking camera. I hate you. There we go. Yeah, we're going to get that fixed. Don't worry. We're going to get that fixed, everybody. Don't worry. That will be fixed soon. We'll take a look at this one. This is the last one I got to roll with. So yeah, the way I see WFT is there's a drastic sell-off, and then it's just turned into a bounce. And I wouldn't think it's anything to invest in. It's most likely this run will end fairly soon. Let's see. I would say the highest you're probably going to see WFT is up to about $1.52 if you're lucky. Yeah, maybe $1.52, but probably right at about $1.40 you'll see. Like if it really wanted to run, that's the highest it'd probably get to, right around that area in the short term. I guess it could go higher, but yeah, I mean, just look at it. It's been downtrending, big drastic sell-off. There was a reason it sold off this hard. It's just bouncing, you know. This is a nice bounce, consolidation, and a curl. So this is a nice move off of a curling action, but this doesn't mean that it's time to really buy up the stock or invest in it. All right, guys, with that being said, that is all I have. I got to get back to our private group. I appreciate everybody tuning in today. If you can, before you head out the door, please give a thumbs up. I really appreciate it. We're at 50 likes. I'm sure we get quite a few more, so just hit a thumbs up before you head out the door, and I will see you guys all tomorrow morning. So everybody take care, have a great day, and stay green, most importantly.